I'd like to welcome everyone to the Condominium Management Group June webinar series. The series is focusing on insurance. This is part 2 of a 3-part series. The CMG webinar series is being offered to our directors and in communities that we service. I'm Shelley Seavey, the Condominium Managers Resource and Compliance Manager with CMG, and pleased to be your moderator for this session. This webinar will feature industry experts speaking about specific aspects relating to insurance and the challenges in the market, the condominium market. This webinar series is not intended to provide you with opinions that would protect you under Section 37 of the Condominium Act. If you are a director and want to use the protection under Section 37 of the Condo Act, you need to get an opinion about your specific situation from your professionals. In addition, the information provided in this webinar is current as of today's date, June 9th. As things are changing rapidly and information provided today may not be relevant at a future date. Also, please be advised that references to the Condo Act or other legislation is reference to Ontario legislation. It's more important than ever that condos rely on their hired professionals for advice in challenging times. So let me please introduce our guest this afternoon. Shelley Glover. Shelley is with a chartered insurance professional and has worked in the insurance industry since 1989. She specializes in condominium claims, and she is also well versed in claims process relating to unit owner policies. Throughout the years, she has been employed in various claims positions, working for both insurance companies as well as 2 national independent insurance companies. Shelley is currently district manager of Eastern Ontario with ClaimsPro, an independent adjusting firm, overseeing offices in Ottawa, Pembroke, Kingston, Belleville, and Peterborough. You might recognize Shelley as she has presented many seminars relating to condominium insurance, including our local CCI chapter, Canadian Condo Institute of Eastern Ontario. I'd like to welcome Shelley today.
Thanks, Shelley. Other Shelley. Thanks for having us, and welcome, everybody.
Thank you. Our second guest this afternoon is Trish Watson. Trish is also, she comes to the table with 17 years of experience in condo insurance. 15 have been dedicated in managing with Gifford Carr Insurance Group in the condo program. She is committed to clients and has participated in AGMs and owners meetings to support directors and managers. Trish provides coverage options, risk management tips, insurance insight, and advice for boards to make those informed decisions to best protect the assets that they are responsible for. Welcome, Trish.
Welcome, Shelley, and thank you so much for having me. Hello, everyone.
And thank you very much for joining us, both of you. And so let's just jump right into today's discussion. So today we are focusing on coverage add-ons and as well as to make a claim or maybe to not make a claim. So what to consider? The Condominium Act dictates that there is coverage that must be required for every condominium corporation, kind of like a basic coverage. With that being said, Trish, can you go into a little bit of the detail about what would be some of the add-ons that condominium corporations should consider looking at when looking at renewing their policies?
Absolutely, I'd be pleased to. So most policies begin with your property coverage based on your building values. They have equipment breakdown for such items as arcing, which isn't covered under your regular policy, lightning, that kind of thing. It's for your machinery. There's commercial general liability and directors and officers liability, and that's your basic policy. The add-ons are for litigation purposes that have come in the last decade or so, which is the human rights. That is a coverage for the legal expense, because that can be quite costly, and that's to do with the Human Rights Tribunal. So that is really important to get, and it's very economical. There's a crime coverage that it basically protects your assets from somebody on the board or an employee that may steal from you. So those limits are starting at $20,000, and you can apply, you can have higher limits if you need them. And the other is a volunteer accident package. And what that does is safeguard the commercial general liability. So it's a very similar product. However, when you make numerous claims on your policy, that generates either ineligibility for a program or your coverage can be completely non-renewed. So to have too many commercial liability claims, you're looking at those increases or the loss of coverage. So the volunteer can protect that.
Oh, interesting. So in your experience then, are you seeing more in the way of human rights applications?
We absolutely are. That they have risen in the last, I would say, 7 to 10 years. So, and it is such an economical purchase. I don't suggest that any corporation doesn't have it, but they do have the option.
Okay, interesting. And then I guess, Shelley, as far as you wouldn't see anything on your end as far as the human rights. It's mainly a claim of legal fees.
Yeah, so from an adjuster's perspective or from a claims perspective, the claim would still come in, but the coverage to be triggered would be for the legal expense side of things. So we would still need to investigate the claim being made, the tribunal claim being made, because we need to make sure it checks the boxes for coverage. But ultimately, we wouldn't be directly involved in the tribunal element. It would just, again, be to determine, whether the case being made is covered, and if so, then what those legal expenses might be. Sometimes the insurer, and I know, in the condo world, you guys have your own, preferred legal experts. So the policy does allow for the insurer to appoint a legal representative. However, most insurers, they're more into defense law when it comes to civil litigation, maybe not so experienced in the human rights side, tribunal side of things. So anyway, it's more or less just to make sure that, the expenses are legit, and of course, subject to whatever limits contained in the policy.
Okay, interesting. So human rights coverage, I'm trying to think of an example. So maybe an example that comes to mind that would arise is accessibility to perhaps like a parking space.
I can speak to that as well, Shelley, that it is the access to parking discrimination of any kind. So whether it's a gender discrimination, whether it's a race discrimination, and just availability to certain things because of a disability.
Okay, yeah, it's something that you don't know you really need it until the circumstance arises and comes up. Interesting. So specifically for the directors that are joining the webinar today, how are they covered for the decisions that they're making on behalf of the corporation?
That's the directors and officers liability coverage that should be put in place on every condo policy. And their limits should be no less than $2 million. And that is for the decisions and acts that they make that are, of course, not known or fraudulent, but just you're doing your due diligence, you're doing the best you can, and an error is made. That's what the D&O is for.
Okay, interesting. And in any circumstance, would it not cover a director?
For knowledge prior to, so anything that's really dishonest, because it's a claims made policy. So meaning we have to be notified at the time of the loss.
Mhm. And what is the time limit on making that, either that type of claim or a human rights claim or particularly these add-ons?
Oh, a year.
Okay.
Yeah.
Okay, from the time that you realize that there could be a claim
Yeah.
or the
And when
knowledge
it
of it.
comes to liability, regardless, we are obligated as brokers to report it instantly, whereas with property, it's not quite the same.
Yeah,
Okay.
just a caveat to that, Shelley, sorry, but yeah, I mean, technically there's a year, but obviously it's always best to notify, your insurer immediately. The stat conditions in most policies stipulate that you should make that notification simply because the failure to do so may prejudice the insurer's position in some way, and, could trigger some issues should it not be, very straightforward. So it's always best at least to communicate with your broker and get that, feedback as to, what next steps should be.
So kind of along the lines of litigation, there is a question in the chat that I'm not sure if either of you ladies could answer. So how to avoid litigation when making a claim? I don't know if you have any comments on that particular question, or I guess the timeliness would be key.
The trick is, I mean, obviously, everybody wants to avoid litigation because all that does is escalate costs, right? Sometimes it's unavoidable, and it's simply because either there's no, or the insurer takes a position that the corporation has no liability, so therefore they're denying the injury or the damage sustained. And possibly the third party is not accepting of that, so they just go ahead and proceed with issuing a statement of claim. Also, avoiding litigation probably helps to reduce settlement costs to a certain degree. When things tend to go to that extra step, the demands also increase with that. However, sometimes it's just not feasible. Sometimes before the claimant even comes to you to say that something's happened, they've already retained legal counsel. Now, even though they've got a lawyer, it doesn't necessarily mean the matter needs to be litigated. We deal with lawyers directly all the time and do manage to settle things out. Again, it's very case specific, and sometimes it's unavoidable because of a position taken on either side.
Mm-hmm. Okay, and there's another question too. I'm trying to think of an example for a director making a mistake that would not be covered, like acting as a director. So I believe that Trish kind of hit on it, that if a director acts in good faith and honestly, and there's no conflict of interest as well, that the director D&O should kick in and be able to cover. So I think that if you act in good faith, and honestly, that should, and there's no conflict of interest.
I'll respond a little further. Also, there's exclusions on every policy. So for example, you do need to read your exclusions. One would be breach of contract. That's clearly not covered under a directors and officers policy. So you need to know what your wordings say. But the DNR is for your errors, your mistakes as directors.
Mm-hmm. Yeah. Okay, and another question came in. If we could use the Q&A, that'd be appreciated. But we'll go ahead and try to answer this one. Can we use insurance to pay the lawyer's fees during litigation instead of paying from the condo reserve fund? The litigation for lawyer's fees, as far as the human rights coverage, that is what the claim is basically for, covering the litigation costs of the legal fees.
I see two questions here that I can respond to. So to Angela, an example of a director's mistake would be, say, changing the look, the aesthetics of your area, planting a new landscape, for example, and you haven't had permission to do so, and you just went ahead as a board to do that. You could be sued for that choice. I've seen that happen, whereby the board actually had to bring the property back to the way it was. So depending on what your declarations say and what the rules are, because that's the other issue, everything has different rules and bylaws set up. But that is one error that a board has made that I've seen.
Okay, and then when we mention director, does that cover the whole board? Yes, if you are an elected director on behalf of the condominium corporation, you're part of the board, and that insurance does cover the all board members.
That's right,
all
and committees.
And committees too. Thank you. Good point. So back to the add-on conversation. So most recently, the city of Ottawa sent out notices to all owners in Ottawa, homeowners, talking about the insurance assistance program for underground pipes on properties. So how does this affect the condo corporation policy and or coverage?
Do you want me to take that one, Trish, or?
You can start and I can jump in. Yeah.
Okay. Yeah, it's interesting when that came out, of course, because it created a lot of questions and potentially some confusion. Not knowing exactly what the city is covering or that partnership that they've developed. I know they call it a warranty. I don't know if there's any caveats to that or not, but ultimately on a property claim, any resulting damage as a result of a sewer pipe collapsing or a water main fracturing or whatever the case may be, any resulting damage is normally covered by the Corp's master policy. The damage itself to the pipe, whether it be because a tree root came through it or it's 100 years old and it collapsed. A lot of the times we'd have to go to the policy for that, but wear and tear and gradual deterioration and stuff like that isn't something that any policy normally provides coverage for. So there, and again, not knowing how it's priced or what exactly that policy covers that the city's offering, it's difficult to say, whether it would be beneficial to purchase or to at least kick the tires and see if there's any value to it. Trish, any thoughts?
It's the same thing. I was thinking earlier that similar to when you have mold and there's been damage occurring for years and years, right? The insurance isn't going to cover to dig into the wall to see how long that damage was occurring. So anything resulting from a sudden and accidental event, that's covered. But other than that, no, the pipe wouldn't be covered under an insurance policy.
Okay. From your experience, Shelley, has anybody checked into it? Like, I don't like, would it be cost effective for a condo corp to purchase it? I mean, if you've got hundreds of units, I don't know.
It's again, it kind of boils it back to the boundaries of which the corporation would be responsible for, and where the boundary is that the homeowner would be responsible for. So and many of the boundaries, the corporation has, outside the boundary of the home, the exterior of the home, that's where the corporation takes over.
Yeah.
But it all depends on each individual condo corporation, that's for sure. It really varies. So let's move into a scenario. So of course we used the scenario last week, but this is such a scenario that comes into play so often, and I'm sure, Shelley, that you could comment on this too, is water escape, water damages, whether it be dishwasher, a water line to a fridge, an air conditioner, drainage line, a toilet overflow. So there is water escape. It's going between the boundaries of different units. It is, let's say it's $75,000 and your insurance deductible is, let's say, $50,000. Right now it's unknown where all of the expense lies. Is it the homeowner's responsibility? Is it the condominiums corporation's responsibility? So with that being said, can we involve an adjuster without making a claim? Not that we don't want to involve you, Trish, but can we?
Definitely. Yeah, so I mean, in recognition, I mean, it's something we've always provided, obviously, but in recognition of the difficulties that the condo industry as a whole has been experiencing over the last little bit, you know, making that claims hesitancy, you know, that much more relevant. So myself at ClaimsPro, we offer the service that we call it the Lucid program. So it's loss under claims insurance deductible. So it's specifically geared to the scenario like you're talking about, Shelley. And it doesn't have to be if it's just under the deductible, obviously, even if the damage is slightly over the deductible, you know, there's still a possibility that you don't want to make that claim because of the ramifications down the road. And that's where my friend Trish would come in with her recommendations. But so yeah, you know, obviously I have a personal vested interest in it, but there's a couple of different things that an adjuster can bring to the table. And not to take away from our property managers. I know you guys are well versed in all kinds of things, but a lot of times, first of all, it's the cause of loss. You know, what's happening, you know, why is it happening? And then as it relates to that, the potential for subrogation. So if the corporation decides to self-insure or it's under their deductible, but they've got a $50,000 deductible and maybe no deductible bylaw in play, there could be an exposure there to recover the funds. So that's something we handle all the time as adjusters, and it's identifying if there's a responsible party. Let's use your fridge line as an example, Shelley. And actually, it's funny, I've got one on the go right now. It's suggested that at the time of manufacturing, one of the connections in the back of the fridge that brings the water line in wasn't manufactured properly, or potentially there was a deficiency. So by me recognizing the possibility of that, by knowing what experts to bring in to determine that, there may be, in effect, a way to recover some of the funds that the corporation may expend on damages. The other thing that we do quite regularly is you'll get those incidents happen, and Trish will tell you to get an estimate, and you know, you'll be provided with this, you know, 30-page document, you know, from an insurance restoration contractor. What we have the ability to do is take that estimate. First of all, you know, is it right? Is it, you know, truly relatable to the scope of damages that have occurred in the unit or units, and then compare it to the standard unit. Like, are there charges on there that aren't the corporation's responsibility to address, anything to do with contents or upgrades? And so, you know, we could take an estimate that might be 30,000 and whittle it down, and all of a sudden now it's 22,000. So just kind of different things like that. So cost control on damages, project management, like just overseeing the entire process, bringing in contractors, bringing in experts, recommending payments, that kind of thing. And then I think how it eventually pans out is at some point as well is if this matter does have to go to the insurance company, we find out that, okay, that, you know, the corporation can't self-insure on your $75,000 loss with the $50,000 deductible, we can flip it to an insurance claim. And basically it's an easy transition because we've already done all the things we would have done had the insurance company been involved right from the get-go. So it's kind of a win-win-win. It's a win for the insurance company if it ends up in their hands. The matter's been, you know, taken care of and dealt with the way they would have. It's a win for me because I have some work to do, and potentially it's a win for the corporation because we've kept it out of the hands of the insurance company, but we've adjusted it and, you know, recognized savings where there might have been savings.
Absolutely, thank you. A lot of good details that I'm sure that many would not consider, because as soon as you involve an adjuster, you think about making a claim. So in most cases, but in some cases, maybe that is not the case. So there is, I'm just looking at the Q&A. We see a few questions that are coming in. So as far as let me start at the top here. We have Denis, who has Is there something on the web location on the internet where you could find information that can be found about the roles and responsibilities of different players when making a claim? There was a significant fire claim done in 2016, and he's just looking for something that outlines the insurance, the broker, or other players in the claim process. Don't know if you have any information that's online or anywhere where we could.
Yeah, I don't. I mean, again, us in the industry, we could, cite that in a second. Whether there's anything specific on the internet, I'm not sure, but arguably what you could do, and when reading the question, I understand this is from a claim that happened 4 or 5 years ago, is at the time that you're experiencing the claim or you're dealing with the claim is, if there's any questions in that respect, you should definitely be either bringing it to your broker or your adjuster, and they'd be, well able to explain the different roles. I know it's complicated, especially if, again, we're in the world, we understand it, but, you call your broker and then they kind of, report it, and sometimes then they kind of back out of the scene and the insurance company steps in. And then, of course, as you're handling the claim, there's other experts that you're bringing in, engineers, contractors, these types of things. So it's definitely something that if you have, the question, reach out to the experts that you're dealing with, and they can provide you that information. Unfortunately, I don't know if there's anything out there that spells it all out.
Okay. So I'm going to jump back and forth to add-ons. So Trish, would there be an add-on for if people have home-based businesses operating within their corporation?
That's actually something they need to deal with their condo unit owners policy, and it has nothing to do with the commercial side.
Perfect. Thank you. That was a quick answer. So how is the adjuster compensated for helping the condo corporation?
Don't do it for free. No, basically, and if anybody's interested, they can come to me directly. We do have some marketing information on it, but it's one of two ways. If you just kind of want a quick and efficient, overview, and looking for some guidance, and then your plan is to kind of handle it yourself. There's just kind of a flat fee charge for that based on time spent, and then the other options, if you want us to take it that much further, it's an hourly rate that we charge, and the corporation would compensate us for.
Okay. So Trish, a water claim. So when condominium corporations are considering making a claim for water damages, what are some of the things that they should consider or not, like if it'll go against their claim record? So
yeah, well, exactly. So when there's a loss, call me and we'll discuss what is your history already, because that plays a huge role. And again, we want to get that estimate, because once we know what the deductible is, how much the damages are, we can make an educated decision on whether it's worth it. Clearly, when you've got, a $10,000 water damage deductible and a $100,000 loss, we know this is going to go through the insurance. There's nothing we can do about that. But in this harder market, whether it's a property claim or a liability claim, they're all against your record. So you want to make as few as possible, because it is for the big losses. That's what the insurance is for.
okay, thank you. So if a corporation is making the changes within their building, an electronic water leak prevention system, for instance, or toilet seals are being replaced on a regular basis, they have a maintenance bylaw. Will these measures make a difference with their premiums?
Not in this market, unfortunately. Now, the market does change. We don't know when it's going to go back to a normal / competitive industry. However, now realty, there's really nothing we can do. The prices are up. There's no claims-free discounts on the commercial side. There's no risk mitigation that will reduce premiums. right now.
Yeah.
What about, sorry, Trish, what about in the case where if somebody was on the bubble, let's say they'd had, or somebody, a corporation was on the bubble, let's say they'd had a couple of claims in the past and then brought in this risk mitigation system, could it help them to stay with, you know what I'm saying, with the insurer, or minimize the premium increase, or?
It could keep them on a program, absolutely. It can keep them out of a high risk market for sure. As for premium reductions, I mean, it's possible, but not likely. Full disclosure.
So as far as we touched on the fact that if you're not making a claim and you would like to involve your adjuster, to contact Shelley, and she can guide you and help you through navigating the repairs and trying to figure out where the expenses lie and where the repairs lie. But as far as the involving your property manager, when would, if you are making a claim, would the expense of a property manager involved in the process of the claim be covered under the policy?
Yeah, so again, and each policy is different. We're speaking in generalities as per the policy that Trish and I deal with. Yes, there are certain caveats that have to be established. It has to be to do with advancing the claim, or assessing or helping to assess the damages on the claim. There's a specific wording that we have to follow. But yeah, a property manager is considered in the same lines as professional fees is what we call it. So, you know, engineer, or, you know, some other kind of accounting expert, whatever that might be, subject to the criteria that's set in the policy, submitted for consideration.
Okay, and I believe the key here is submitted for consideration. So on the front end, if you know that you're going to be incurring these expenses and you have a major claim or repairs that need to be done, and you need the involvement of your property manager or a representative to help forward it, best to contact either your adjuster or your insurance company to find out if those extra expenses of professionals will be covered under the claim in advance.
I'd like to step in on this. I'm not sure, it's an anonymous attendee. And I can respond to say the only potential exposure, it's talking about the home-based business again. It really, there's more foot traffic, but it's not going to affect your policy. It's not going to increase your liability premium. It's not going to have you not covered. So I'm not certain what the lawyer is speaking about with the registry of home-based businesses. We've never come across that. We've never had to do that. So there is certainly, whatever your home-based business is, there will be more foot traffic on the policy. So there could be potential for more slip and fall. But once again, it isn't something that's going to have you uninsurable or have us increase your pricing or anything like that.
In the case that there is, what just came to mind whenever you mentioned the slip and fall, is if you do have a slip and fall on your property and there is a claim from the person who perhaps was injured, should they be contacting you immediately, Trish, to put this on record? Or?
Yes, absolutely. We put the company on notice. And again, that doesn't, in the liability side of things, it doesn't automatically generate a claim. What it does is it prevents the company from being prejudiced should a loss come further down the road. Some of them come to naught. Sometimes they don't end up, you might get a lawyer's letter and then it goes away. Or you may hear from 2 years from the date of the loss, the statement of claim comes out. So it's just best that the company is notified as soon as possible.
Excellent, thank you.
Can I just, sorry, Shelley, I'm just going to throw something in on, because we're talking about slipping on snow and ice. There was a new amendment just this year, I think it's Bill 118, they call it, when there's a slip and fall on a premises, where they now have to put, or the person who's injured themselves has to put the occupier on notice within 60 days of the incident happening. So that being said, I think what you're going to see is that if there is an injury that's going to be claimed, you're going to find out about it much quicker now than, to Trish's point, 6 months or a year later, and nobody knows anything about this event that happened. So hopefully that will help protect against those kinds of instances.
Absolutely, yes, and that is key. That timeline, that's for sure. It will definitely change the reporting of any incidents. So, not a question. So we have. Okay, I see that there. Your comment about accessing the webinar in advance. We definitely will do that for our future part 3. And
yeah, I think this other question, Shelley, I think that's just a follow-up to the question about they had requested a breakdown of who all the parties were involved in the claim. So, and I apologize, Denis, I might have missed that when I originally read the question, but yeah, that's unfortunate. I don't know why it wasn't provided. But again, like it's not a secret, there's full transparency. Everybody's role should be explained, as they're becoming involved in the claim. I do understand it gets complicated because, again, we know who everybody is, we know what their role is, and I get, as an insured or as somebody who's not exposed to this on a regular basis, it can be quite confusing. So yeah, unfortunately that wasn't provided to you, and that's too bad. And but yeah, don't be hesitant to ask for that information for anybody else who's had to deal with something like that. It's information, like I said, that should be shared and fully explained if need be.
And if I could add to that, I do feel that Shelley you did respond when it starts basically with the broker, and then the broker contacts the adjuster, and then the adjuster contacts contractors, engineers, whatever. So that is the flow, but how that's going to look, we can't possibly know, because it's not going to necessarily look the same every time.
No, every claim is pretty unique, I imagine. Yeah, very unique, and the challenges that go along with that. So some of the key takeaways today, we have the add-ons is when you are renewing your insurance policy, is to look at some of the coverage that you have and consider those add-ons onto your policy. So Trish, human rights?
That's a big one. And even at what is already in place, make certain that your liability limits are adequate, depending on the size of your corporation. I mean, we're not Toronto. We don't need to have 10 million limits, but we should have 5 million commercial general liability. And we don't recommend directors and officers any lower than 2. Sometimes that's a cost saver. However, in the litigious society we're in, we do suggest that it's at least 2 million on the D&O side for smaller corporations. And if you're larger, you're going to want to look at 5. So the other add-on is the volunteer accident. And looking for cost savings, get an appraisal. Get an appraisal to see if the values are correct, because you may be overinsured, and that's a place to find a little bit of premium if you are.
So that's definitely key, is to get an appraisal so that you're accurately insured, whether it's over or under but it's accurately insured. And right. Shelley, some of maybe a key takeaway from you would be there's consideration of involving an adjuster without making a claim.
100%. And like I said, there's different options. It's, you don't have to hire us from, start to finish. It's, utilize this for maybe where there's some, questions or, some assistance in, cost control or cost realization. But I mean, definitely, if you had something going on and, and you needed another type of expert, whether it be an engineer or, a plumber or whatever, you wouldn't hesitate to call them. And, not to toot our own horn, but I almost feel like we're, in that same arena. There's a service that we can provide, and if it helps, save premium dollars or deductible increases or claims volume down the road, then it's, money well spent. in my opinion.
Absolutely. There is another question in the Q&A about HR respecting accessibility. And I believe that is something that you should bring up with either your property manager or legal advice about steps into your standard doorway of making them more accessible if requested by a current owner or prospective owner. I'm not sure that it really does pertain to the insurance coverage, but as far as accessibility, we can definitely, your property manager or your legal expertise can definitely advise you of whether that is required in your particular case. So as well, I do want to mention again that this webinar, as well as our first part and third part, will be recorded. It has been recorded. And these recordings will be available for all attendees. We will be sending out an email to give you the link following the series. And we would also like to thank very much our presenters, our guests today, Shelley Glover from ClaimsPro. Thank you for joining.
Thank you for having me.
As well, Trish Watson from Gifford, Carr. Thank you very much, Trish.
Thank you for having me as well.
Great discussion, a lot of food for thought, that is for sure. And please join us next week on June 16th our next guest will be Tom Gallagher with Atrons Council, as well as Cliff Gething with 7 Building Services. And the CMG team is proud to be honored to serve the board and the owners of communities. And again, thank you very much for joining today, and have a great day. Bye now.